Hi, my name's Keegan and welcome to the Lending Alliance. With a lot of the media attention around interest rates and the fixed rate cliff that gets spoken of, with a lot of Australians still sitting on fixed rates but effectively rolling off throughout 2023, and I guess the last of the really low fixed rates will be ending in 2024. I wanted to put together a little bit of a different video in that I'm going to show the numbers live. I've put together an Excel spreadsheet to show the reality of what many households are facing. If you've not yet looked at the implications of your own fixed rate period, if you're still fixed and you're about to roll off, I guess this video is for you, so you have a better understanding of the numbers and what you can do to ensure that you're in the best position moving forward. So I'm going to share my screen now and talk through this scenario here. So under scenario one, we'll look at the left column, which is the fixed column. That's the assumption made of this particular situation still being fixed, or client, I should say. And then we've got the right-hand side there, which is the variable component, which would be effectively like a roll-off rate. And we'll talk more about roll-off rates in a moment. But on the left-hand side, we've got a nice low fixed rate of 1.89%. We've got a loan amount of $500,000. And the loan term, which is in months, we're saying the remaining term is 324. So we've made an assumption of a 3-year fixed here. Current repayments are going to be around $1,970 per month, so just shy of $2,000. Now, with the roll-off and off the back of 12, not consecutive, but almost consecutive interest rate increases, we're seeing much higher interest rates. And as a result, monthly repayments are going to increase by quite a large amount. So the annual increase is just shy of $14,000 for this household. A very big difference, and something that people need to be aware of so that it doesn't come as a surprise, and you can do as much preparation as possible for the impending changes. Scenario two, what we're going to do is we're going to look at this one. It's a little bit larger loan amount, and the loan term is going to be a little bit shorter because we've made an assumption of a 4-year fix. So there's only going to be 312 months remaining when this particular situation rolls off. And crucially, you're going to see an annual increase here of $24,000 per annum, which is a dramatic change. And then in scenario three, we are going to look here at an even larger loan amount under a similar loan term of 312 months. So $1.35 million, fixed rate's a little bit higher, but it's going to roll off to a similar sort of variable. And the annual increase is just shy of $35,000 per annum. Right? So what can people do to ensure that they're in the best possible situation? The sooner you start the conversation with either your existing broker or if you've got a relationship direct with the bank, get talking about what your options are, right? Your fixed rate is going to roll off onto a variable rate. The most important thing for me and what we do for our clients is we ensure that in the first instance that roll-off variable rate is as competitive as possible. So each bank's going to have their own method or pricing tool in which that will basically go through that process to find out and understand what your roll-off rate's going to be. There are instances where people's variable rates roll off onto pretty uncompetitive rates. Banks have gotten better about it, but to ensure that it's as good as it possibly can be, you're going to want to sort of dive in deeper through a pricing process. You may find yourself in a situation where a refinance or another bank is going to offer you a better opportunity. So that's something else that you might want to explore as well. Once again, obviously my recommendation being a broker is find yourself a really good broker. And, if that's us, then we would love to look at it for you. But start the conversation, understand what the implications are, what your monthly repayments and your commitments are going to be. Put away as much money as you obviously can to ensure that you're ready for it. But then also explore what other options you may or may not have. And in terms of, I guess, the outlook for the future and what that holds, the reality is I'm yet to see anyone who's been right about realistically anything interest rate wise over the last few years. Even the RBA themselves had predicted interest rates were going to be, on hold until at least 2024. And as we all know, that definitely didn't happen. So in terms of making predictions around what future rates and things look like, I'll be honest, I don't know. Most people, well, probably no one knows. So prepare for the now and your situation. And the more prepared you are for it, you're going to be able to sort of, be able to absorb the punches as they come through with the interest rate environment as it's currently sitting. So if you've got any questions or anything like that, please feel free to book a time in my diary on our website. If you just go to thelendingalliance.com.au, if you click on the About Us or Meet the Team page or even schedule a call, you can basically book a time in with myself or someone from the team, and we can talk about your situation in more detail, and that way you're going to be as best prepared as you possibly can be. Thanks so much, guys. I'll catch you in the next one.